that last person sitting in the back row on the right?
No.
That's Alice.
Oh, really?
Yeah.
Did you get a disclaimer?
Yes. No.
Why?
Do they pay actors?
No. Yeah. They volunteer. They volunteer. They actually volunteer. So my name is Richard Wong. I'm a mortgage broker with The Loan Story, and this is just a brief overview of what it is I do. Our office is located in Santa Clara. It's right smack dab in the middle of the South Bay, in between 880, 280, and Fern Ridge, San Tomas, and Saratoga. So we're right conveniently located to a lot of my clients in the South Bay. So what do I do as a mortgage broker? I am not a lender. I'm sort of a matchmaker. I'm in the middle of every kind of home financing transaction, either purchased or refinanced. So in a purchase, I am partnered with your local respectable realtor, and there I am in the middle, and I'm sort of like the hub of many different parties in the transaction, including escrow, including the borrower, the appraiser, insurance, there's Laura, and of course the lender. So like I said, it's not my money that I lend out. I try to pair each borrower with the right type of lender and the right type of program that the lender offers. So how many lenders do we work with? We work with we're actively and approved with over 50 different wholesale lenders. And these are just some of the names. You may not have heard of a lot of them because a lot of the bigger players like Wells Fargo, B of A, Countrywide, Washington Mutual, those are all names from the past. They used to be in wholesale, and we used to work with all of them, but they all just left one day and decided to go off on their own and do their own retail banking thing. This is sort of a glimpse at the loans I've closed since I moved and transitioned over to The Loan Story in June of 2013. I'm licensed only in California, so I can finance any property within the state. And this is just, most of it is concentrated in the Bay Area and in the South Bay. And you can also kind of see where my borrowers come from. They're employed mostly in high tech, but also in places like Tesla and Stanford University. Team Richard. So for the longest time, I would do everything on my own, and this might sound like a familiar story to a lot of you. It's really hard to let go, and especially if you're a control freak like me, it's really hard to let go of the process and let somebody else and trust somebody else to do it. And it took me a long time to realize that this is the only way to grow, because I only have 24 hours in the day, and I really need to sleep. I really, really need to sleep. So I started hiring a processor, and last year I brought on a transaction coordinator and a personal assistant. So this is my team right here. A lot of you may recognize Katie, former BNI member here. She's brilliant, creative, entrepreneurial. In the middle, there's Ray Dawn. She's my assistant. Go closer. She's young, but absolutely organized, efficient, and amazing. And Aline has been my processor for over 5 years now. She's definitely the best in the industry. We're completely paperless. We're trying to bring our whole office up to speed and modernized as well. That's them. I'm actually an equal, it might not look like it, I'm an equal opportunity employer. There's a Chinese, Filipino, and Vietnamese.
It's like a Benetton commercial.
Yes, exactly. Yes.
Where's the Latin guy?
Thank you.
We're interviewing now. What should I call Richard? If you hear phrases like, I just bought a home in 2014 because interest rates are at 2-year lows. If you bought a home anytime from June 2013 roughly to towards the end of 2014, it's a great time to look into refinancing. I want to see how much I can qualify for. If you're a prospect, if you don't think you can get into a home, please, those are great referrals. We want to be able to plan into the future with these people, to tell them how much you need to make, how much you need to save as a down payment in order to get where you want to go. I'm interested in some types of investment properties or second vacation homes. Again, great referrals for us because we do not only primary, but investment and second homes as well. I'm moving, I'm upgrading or downsizing. We help those people as well. I need cash for, and that usually applies for, I need cash for a big down payment for another home. If people need cash for like weddings or to finance college or for unexpected expenses, I refer them out to, and this is what I don't do. I don't do standalone HELOCs, so I refer them out to Emil at Comerica. I don't do business commercial loans. Anybody recognize that guy?
There's your picture.
Tomasino. Yeah, there you go.
And I don't know if you do construction loans?
Yes.
Okay, so construction loans as well. You can refer them to Thomas. And that's my contact information. I kept it kind of short and sweet to open it up with any questions.
What are the rates doing right now?
Lower than what you have. You gotta call me.
Yeah, good answer. Good answer.
What is a good differential? I mean, how many points should you look before you decide to refinance? A quarter of a point, an eighth of a point, half a point?
Good
What makes
question.
sense?
So 95% of our deals are no cost. That means the lender generates enough of a credit to pay for all your non-recurring closing costs. So on paper, if you can save on your monthly payment and cover those costs at the same time, it's kind of a no-brainer. I mean, sure, it takes time to gather paperwork, it's a little aggravating at times, but on paper, it makes sense. So if you can decrease it by an eighth or a quarter of a percent, say $50 to $100 a month for the next 30 years. Mark?
Variables. Are you still selling variables, or are you trying to get people into fixed?
Adjustable rates?
Yeah.
It depends. I think adjustable rate programs have gotten a lot of unnecessary bad press in the past few years, because I think they're great tools for people who aren't necessarily going to stay in the property long term. And so we have to really dissect, the future, see how long they plan on staying in the house. And they're also not as risky as most people think. So, and the differential between, let's say, like a 7-1 ARM, the 7-1 ARM is a program where you get a fixed rate for at least 7 years, versus the traditional 30-year fix, which is the safest, but it's also the most expensive. It carries the highest interest rate. So that differential in interest rate is about 3/4 to a full percent right now, which could translate up to about $20,000 over the first 7 years.
So if a client is currently living in their home, they're gonna move to a new home, they refi the current home, and now they're making it a rental property. Is the lender ever gonna come back and tell them to change that one?
Well, Brian is asking, okay, if you know you're going to move and you refinance the property as your primary, you do have to sign an affidavit, occupancy affidavit that, yes, I am going to live here. Sometimes it says for at least the next however many months. If you sign that and then you subsequently move, chances are nothing's going to happen. But if you ever were to default and the lender were to investigate, yes, they're going to ask, you signed this, then you moved, it looks very suspicious. Lender fraud.
Oh, they.
Allison?
Are lenders still doing mortgages on stated income even before?
Yes, they are. I don't work with any of them, but I've heard that lenders are starting to do loans again where if you don't have income, or they base your income on a certain amount of assets. So it's not quite back at the wild, wild west days of 2008, pre-2008, but it's slowly getting back there. All right, thanks very much.
All right, great work, Thomas.